You could be wiser as an educated advisor. Hello everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Advices, content providers for financial professionals. On today's show, Creating a Budget, part 2 of our series on developing a financial profile, all here on Let's Get Down to Business. Well, welcome to our second segment. We're trying to develop a financial profile, and we're using 5 basic rules of thumb. Again, it's not total science here, but we're just trying to give you a reference point, a place to start. It's a good place to begin when you're talking about your money. And the biggest one, and it's a shocker, is a personal budget. I am surprised that my generation, the baby boomers, most of my clients that are the baby boomer age have never used a personal budget. Shock. It just blows my mind. But here's some of the reasons that you should be doing it. And by the way, if you're a boomer and you're heading into retirement, you are going to need a budget. You need to get control of your spending, figure out how much to manage your taxes so that you can keep more of your money. Those are all big issues. Now, reasons to prepare a budget. It's a planning tool. It's a yardstick to measure where you're at and how you're doing. It can help you kind of rein in your spending because you want to become you can't become a disciplined investor until you become a disciplined spender. So let's look at some of the preparing budget items. Past income and expenditures. I want to look at what I've made before and the expenditures I've had. I also want to look at setting goals. I want to do debt reduction goals. I may want to do savings goals. It could be savings for down payment on a home. It could be savings for college education. It could be savings for long-term retirement. I also want to be able to go ahead and maintain records. I try to keep the last 3 years of everything. And actually, to be honest with you, I probably got 5 to 7 years of everything. I need to head to the Shredder event here in my town. And then the last one, of course, is periodic review. I say the word periodic is too loose for my language. I like to use the word annual. I'm sitting down. If I'm married, I'm sitting down with my wife. If you're married, you're doing the actual budget and you have a husband that's kind of deferred this to you. You need to sit down and both walk through this at least once a year. A good time to do this at the end of the year. You're already looking at tax issues. You're trying to manage your taxes. You're trying to get ready and prep for the next year. This is a good time to review your budget. Now, interestingly enough, look at the numbers off this that actually express the national spending patterns of most of the Americans. They spend 12.6% of their total budget. And by the way, I'd like to use the word right now because we don't put taxes in here. This is the net take-home pay. This isn't my gross pay. So when I'm looking at my net pay, I'm taking food, 12.6%. That might be a little higher in my household, I don't know. And then you're looking at clothing at 3.3%. And I got to tell you, I don't know if they're using senior discounts and a lot of coupons at Kohl's, but that seems a little low. But housing, almost everyone is at a third for housing. That includes not only rent, but if you're buying it, it's going to include your property taxes. It's going to include your house insurance, home insurance. It's going to include HOA fees. It's going to have maintenance issues. Everybody has to fix something, keep things going. You have to change out filters for furnaces. All that is compiled in this number of 33.4% on the national average of where you spend money. People spend about 20%, think about this, in an account that the government calls personal. This is total discretionary spending. To me, this actual category needs to be gone. You need to be able to sit down and really carve out a really good disciplined way. First thing, of course, is we want to get rid of our debt. So if we have a personal account and we have 20% of that, we may have to cut back on going to Starbucks or going out every night to a restaurant or on the weekend. Another area is medical, and this is one place where I think it just is not going to get better for a little while until we figure out how to make this work in America. They say it's 8% of the national average. I'm really shocked at that number. I would have thought it's at least double digits. To me, the actual premiums, whether you like Obamacare or not, that's what we're presently under, those premiums are high. There's no doubt about it. Anybody that's spending it. And if you're getting help from the government to make those premiums, God bless you. But the rest of America, remember, they're paying some serious money here. So that number 8% is probably too low. Transportation, 17%. I believe it. You have cars, gas, you have collateral, you have plates, you have maintenance, all on these things. These are all, ancillary and collateral costs to owning a car. There's a debate now based on Uber and Lyft whether seniors should have 2 cars anymore, drop down to 1, and one of the married couple can go ahead and use Uber or Lyft. The cost is cheaper than owning a car. So those things are coming online and we're looking at it. And then there's about 6% that we can't disclose because we don't know what it is. We just know it's going somewhere. Think about that. That personal area and that miscellaneous or other is almost 25%, and that's where we have to go out. Now, this is a basic budgeting workshop. If you say, Steve, I'd really like this, as an advisor, you should be handing every one of these people this. If you say, Steve, I like yours, I'm using Advices Advance. If you want to order their 30-day free trial, not only to get this, but everything I talk about, happy to give it to you. Just write me at steve@lifesizesolutions.com or just head out to my website at lifesizesolutions.com and contact me and tell me you want this. Now, I want you to see how this is broken up into the categories. Before we get into the actual topics or items, look at this. I want to know what you historically have spent. And sometimes people say, Steve, I haven't even kept a budget, so how do I know that? I want to see your checkbook and all your charge cards. This will give me a good idea where to start. It may not be the perfect place to start, but for most Americans, it's a good place to start. I want to look at the historicity, your historical. Then I want to say, what is your current budget today? What is your current budget? You still have fixed issues like your home, your mortgage. You know what that's going to be. You still have basic ideas. Maybe you have fixed costs. I want to know what those are and then try to figure out what the utility bill. You know, you could go back to your utility company and say, even though I'm paying it on the month, what would happen if I wanted to smooth it out and pay one flat fee? For some people, that's a budgetary item. Not so much a cash flow, but it's a budgetary item. I'm getting a hold of it. I know what I'm spending every month. I like fixed costs. Now then we want to find out, oh, that was the current budget. Now I want to look at, well, what was the actual budget? Because, you know, I budgeted for this, but I wound up spending that. Is the difference higher or lower? When I was a young father, I used to tell the kids if our utility bill came under a certain amount, we would take the difference and go buy pizza or go out to Dunkin' Donuts for a little donuts on Saturday. Trying to be good stewards of our money. So sometimes I'm looking at the current budget, the actual budget, and then what is the difference? And when you look at these categories, the first category is debt, savings, and investments. You're going to look at your charge cards, your credit cards, your installment loans. You're going to be looking at your educational fund, your retirement fund, and other savings goals. Like, again, you know, down payment on a home would come to mind. Then I'm looking at my total debt savings. Now, listen, there's a balance here. Some people say, let's get rid of your debt altogether. And I'm very aggressive. I like to do that as well, taking my highest interest payments first and trying to eliminate and create cash flow before I start to going into heavy savings. So that's a big issue. Another category, food. We have home consumption, and here's a big one. Outside the home, restaurant, Starbucks, all your side venues on consuming food. When you look at that number, and you go to your charge cards especially, and you look at those numbers, you're going to be surprised. You're going to be sitting there probably almost 30 to 40% over your grocery bill just because you're going out. You need to pull that in a little bit and be more judicious on where you go. Clothing, the same thing. There's cleaning. I have dry cleaning issues. I do my laundry at home, but I still have dry cleaning outside. I have to include it. My clothing, new things that I'm buying that I have to have. I'm retiring certain ties, suits, so forth and so on. So I'm always looking at this. And then, of course, I want to look at my budget. Do I have a budget? Some people say jewelry, or they use cufflinks or ties or earrings for gals. It just depends upon what you're using for. And part of that is looking well at work. And so they incorporate that into their budget. Housing. Whether I'm doing rent or mortgage, I have a payment. If I have a mortgage, I'm going to have house maintenance issues. I'm going to have to worry about repairs. I'm going to also have to be concerned about property taxes, HOA fees, and home insurance premiums. All those are collateral costs that I have to include in my housing. And remember, if you're going to include it all, personal property has to go in there where you're talking about furniture. You're talking about all your personal. And if you have little things like you're a musician, you need to get that separate on top of your property casualty insurance because it's really a separate item. Jewelry, musicians, collections, maybe you collect stamps or you collect coins. All this needs to be protected, probably separately. And then all your appliances, think about this, and all the home bill, think about, we might have $5-6 grand in a normal middle-class home, just in appliances itself. I'm sure it's probably more. And then I got my utilities, I have my water, I have all those bills. All of this has to be tabulated and put on our budget so we can get a good idea. We may have personal or legal responsibilities as well. So we may have personal care, we have child care, we have legal and accounting, we have life and disability insurance and other personal and legal costs. Medical, we have our premiums that we have to pay. We put a side fund together to start collecting for deductibles so we have it in advance and not wait till the emergency fund gets tapped on something that we didn't see or have unforeseen. Remember, medical, we're going to be using this for the rest of our life. That's why I love HSA accounts. Transportation, not only auto payments, my gas, my maintenance. I have to put everything including plates for my state. I have to include all this so that I have a pretty good idea what I'm spending on travel. And then miscellaneous. Sometimes maybe you buy books. Some things you do, you go on little vacations. You go on small weekend jaunts. We need to incorporate this all here so we can get the total page, get the total expenses. Again, we're doing historical, then we do the current budget, then we do the actual budget and see, did we save or do we make money? You can't develop a financial profile if you don't have a developed personal budget. Don't forget to watch our next segment on determining your tax bracket, part 3 of our series on developing a financial profile. And keep in mind, before moving forward with any of the ideas on our show, always check with your tax consultant, legal counsel, or compliance officer. And don't forget, you can subscribe to my consumer show, Steve Savant's Money, the name of the game. Daily content you can post on your website, social media accounts, and database distribution. I'm Steve Savant. Thanks for watching.